Well, the Dow closed higher for the ninth consecutive session, while the other major indices more or less meandered in an otherwise quiet session. After the bell, we had earnings from Tesla. They missed on the earnings, beat on revenue, but the shares are up because that Model 3 will start production in July. C-Trip blew away consensus on the top and bottom lines. Looks like we may be traveling again. LB Brands, maker of Victoria's Secret, among other things, they had a big beat, but their guidance was so awful that the stock is getting punished in the aftermarket. And then there's Jack in the Box, which continues the misery from restaurants, missing consensus and, should I say, getting jacked in the aftermarket. Now, we have been talking about enthusiasm at the polls. You know, what economists call these things are soft data, right? But more and more, the hard data is manifesting, it's showing a manifestation of that enthusiasm into reality. And the key message from today's market came from Toll Brothers. When they reported, they talked about the housing market having momentum, an acceleration of contracts from November to December to January. They talked about demand, pent-up demand for 7 years, starting to be released, more buyers into the market. In fact, they said the leading edge of millennials are beginning to form families and have kids and buy homes. And then there's the virtuous cycle, something the Fed can never create, strengthened by our own personal balance sheets. Remember, the Dow surpassing 20,000 for the first time, low unemployment, and all this means that they believe the housing market for 2017 is going to be huge. That was at the open. Later on, we got existing home sales for January, surged to an annualized rate of 5.69 million. That's much better than December, which was revised higher. In fact, this is the highest level since February of 2007. Largely, the trends were upbeat. You know, there's a real wealth effect going on, and it's fueling itself at this point. The question is, for how much longer? Here to discuss, Shah Gilani. Shah, you know, the Fed always tries to manipulate things and get that, what they call the virtuous cycle. But we're getting it. We're seeing it. And one of the question marks was housing. But we had two major indicators today from a big player on the building side and existing home sales.
The market is, generally speaking, positive in every direction you look. And in terms of optimism, it's certainly, there's plenty of it. You see that in the housing numbers. The National Association of Realtors showed a 3.3% increase in housing sales in January, which is a terrific number. So, you know, the numbers are great. And in terms of any slowdown, it's unlikely because interest rates are still relatively and historically low. So there's nothing really impeding the market from growing. There's talk about there's not enough construction workers out there, but I think if wages will rise, and they will in due course, then those workers will come off the sidelines. Workers will, you know, switch jobs, and construction will continue.
President Trump talked about the budget today. Sean Spicer reiterated that Obamacare would probably come before tax cuts. There was a lot of hand-wringing over this on Wall Street after the inauguration. They wanted the tax cuts first. Doesn't matter if there's an overall feeling that it's all going to happen, and does the order of things really matter anymore?
The order absolutely matters, and I think we saw that in the Obama administration. You know, when President Obama put Obamacare as the first order of business, I think that sunk his administration for 8 years, and that was
the problem. So you think it's a mistake for them to do Obamacare?
Absolutely. I think budget cuts, the tax cuts should be the first and foremost on the agenda of this administration. There's plenty of time to fix what's wrong with Obamacare. That's going to take time anyway. So when you put tax cuts on the table, that increases animal spirits, that increases the economic growth. That's just that's a solve that the economy needs.
Federal Reserve released their minutes today. I don't know. I don't think they'll hike rates next month, but they will at some point. There were two things they're worried about. One, we just talked about government policies, but I think they meant on trade more than anything else. And the strong dollar, ironically, Steve Mnuchin late in the day said, we need a strong dollar. It represents a strong nation. Are you concerned that the dollar may be too strong? And also, will the Fed derail the rally?
No, I'm not concerned that the dollar is going to be too strong. I'm a strong dollar kind of a guy. I think that makes a lot of sense. It doesn't matter that this dollar is going to appreciate as long as it doesn't explode a lot higher, then we have some problems. I think myself and a lot of folks are worried about tariff wars, or we're worried about trade wars and things like that. That's the only problem. If this administration wants to move from multilateral negotiations to bilateral negotiations with countries around the world, that's a smart thing to do, as long as they don't go overboard.
And as far as the Fed, you think they're okay? You're okay with 2 or 3 rate hikes, or just inconsequential?
2, 3, 4 rate hikes, but we're not going to get above 2, 3%. 3% is probably a standard rate. We're a long way away from 3% on a Fed funds rate. We're at about half a point to 0.75%. So we have a long way to go before we even get to 1.5%. So there's no worry there.
We're still in accommodative land.
We're going to continue in accommodative land.
By the way, sharp tie, like it.
Thanks
a lot, Shah.